So our next presenter has 4 boys, and I think at one stage he had 4 under 4. I feel sorry for your wife, actually, Nick, I have to say. He likes fly fishing, and he used to live in Scotland, and he's now married to a Scot. So please welcome to the stage Nick Griffin, the founding partner and Chief Investment Officer of Munro Partners. Thank you.
Afternoon. Thanks for having me. So my name's Nick Griffin. I'm the Chief Investment Officer at Munro Partners. Munro Partners is actually a Melbourne-based fund manager, and we're actually a global equity fund manager. And our job is to find the great global growth companies. And so we're always trying to identify big structural growth trends that are occurring in the world and the resulting winning and losing stocks. And the one I'm going to talk to you about today is one of the big structural changes that's occurring in the world. There's lots of obviously emerging players that are disrupting incumbent players. But unlike some of the ones we normally look at, like cloud computing or autonomous driving, this one's actually happening right in our backyard. And in fact, in Australia, we're at the forefront of this disruption trend. And the disruptive trend I'm going to talk to you about is the disruptive trend in the food and beverage industry. It is a big screen. And my slide's a bit messed up, but it's okay. So the food and beverage industry is going through huge structural change at the moment. So I think you'll all be aware, you only need to look around to see that people are more conscious of what they eat. Partly because of the way they look, partly because they want to live longer, and partly because even when they do buy food, even if they're buying the wrong food, they premiumise that food purchase. And so from our point of view, food and beverage is one of actually only 3 categories in the world where you knowingly spend more money. The first is luxury goods. A handbag is a handbag, but people buy a $30,000 handbag. The second is athletic equipment, and the third is food and beverage. And the best example I could give you is probably A2 milk, where we all knowingly pay 40 cents more for it, yet none of us actually know what the health benefits are. From our point of view, this is a standard basket slide that we put together at Munro, where we put together a basket of companies globally that may benefit from this structural trend. The first and foremost are the ingredients players. The ingredients players are the weapons manufacturers in the war here. They're the shovels in the mining boom. They have the ingredients, they control the natural ingredients supply chains. And I'm going to talk about one of those in a minute, which is IFF. The second and third area are the healthy natural brands or the innovative brands. And what's interesting here is you keep seeing these Australian companies come up, whether it's A2 or whether it's Bellamy's or whether it's Breville in the kitchen, because the kitchen is now the heart of the home. The fourth area is premiumisation. So this is premiumisation. It's really important to the drinks category. We see this constantly in the drinks category globally. Very few players play in it. And the last is the digital food platforms, which are obviously disrupting the way you actually get your food. And right at the bottom of the losers, these are the big incumbent losers in the world, the multinationals. And so I'm the one who's talking about 2 stocks today because I wanted 2 slides. And the first one I'm going to talk about is actually our best Australian idea. Now, we don't normally like to find Australian ideas, but as I said, we kept coming back to the ones here, and the one we found was actually just up the road here, and that's Treasury Wine. Treasury Wine is one of 2 listed wine plays in the world you can invest in. It sees strong structural growth from a premiumisation of their product and also into emerging markets. And lastly, and most importantly, it has a roll-up strategy. So it has 3 angles to grow its earnings over time. It currently trades at just 20 times forward earnings, or just over 20 times forward earnings, and you should get roughly 20% EPS growth for the next 3 years. It's actually done that for the last 3 years, and actually this stock's done quite well. But what we always like about this, and we see this all the time, most people in Australia will tell you this stock is too expensive. They might say, we want to buy Telstra, it's on 12 times earnings, this one's on 20 times earnings. And we would say yes, but if you look globally, and even if you look within Australia, you might be right in the short term, but in the long run, only one of those 2 companies has a chance of doubling its earnings in the next 5 years, and that's Treasury. And if they execute and do double their earnings in the next 5 years and they hold that multiple, then the share price should double. And it's as simple as that, and it's one of the key beneficiaries on this slide. The second one I'm going to show you just very quickly is IFF. So in IFF's case, this is your much safer play, quite frankly. It is the weapons manufacturer in the war. Quite simply, what we see IFF is one of 6 major ingredients companies globally. This one's listed in the US, and it recently bought one of our other holdings, Fruitrum, in Israel. Ingredients companies basically sell into the smaller players, and they sell into the private label players. So they're a natural beneficiary of the fragmentation in the market. And even the multinationals who are trying to come up with gluten-free Cheerios need to talk to these guys. What that means is they can grow their earnings at 6 to 8%. Their revenue at 6 to 8% because they have this organic tailwind, and then they also have the roll-up opportunities. If you add some margin accretion, you get earnings growth of 15% per annum. And then lastly, most importantly, you get some multiple upside from 22 to 25 times. And again, this stock should be able to double over the next 5 years. Lastly, and most importantly, I hope you'll agree that if you believe that food is premiumising and you think this is a good structural trend, it is also an economically impervious structural trend. And so hopefully you'll agree this will be a good place to invest in the next 5 years. And these are our 2 best ideas today. Thanks for listening.
Thank you, Nick.